Hello everyone, good morning. This is your host, The Cowboy, and welcome to Bitcoin and Ethereum Elliott wave analysis. I think this is episode 41 for YouTube, where every couple of weeks we take a look at the markets, at both Bitcoin and Ethereum through the eyes of the wave principle and try to come up with the best interpretation possible and what's going to happen in the future here. And so last time we've talked, it was in about January 29th, a couple of weeks ago, and we were looking at the prices kind of pretty depressed in here. They were, hovering near 32,000, 31,500, something like that. And we started to have, a little bit of a green shoots of those lows. And now it's starting to build a little bit of confidence that this market is about to do, a little bit of an upside move in here. And I was targeting towards the 45K levels. And so far that approach has been working fine. And here we are a couple of weeks later, still fighting those levels and maybe fighting a little bit of a resistance. But I think, not a whole lot has changed. I think this narrative continues to remain pretty valid. And I like kind of what I see on the charts. So just to kind of resume overall for maybe some newer people, we're just looking that this was a wave one cycle. We're coming back in a second wave. We've done a wave one primary in here, and now we're towards the end of this wave two in a running flat formation. This is a wave A off the highs. That's a B wave to new highs. C wave does not come below the A wave, which makes this whole pattern become a running flat at the moment. Now, it's not 100% sure, right? We're starting to get evidence of that being the case. But the moment you start to break above the 68,978, this will become much clearer. So I continue to respect the narrative. I think it's, and it's, kind of my main primary interpretation in here as I'm looking for these prices to explode to the upside. I have several other, counts in here that will go on, shortly, but this is my primary count. So here is how I'm looking at it. I wanted to study what happened here in the C wave and see if there is enough, data in here that convinces me that this C wave has been completed and we're ready to move to the upside. And one of the things that I was looking for previously when I was talking a couple of weeks ago was that I want to see this market able to start to climb above the swing high. And that swing high was 44,300. And we've gone above that towards almost 45,500. So this is a first indication that this move is done. The other thing that I usually watch for is I'm watching to see kind of how the trend lines look like. And if we're still in a downtrend, that trend should not be broken. And this was broken to the upside. So this is another kind of, I think, solid evidence that this move here is possibly complete. Then I'm also looking to see, how does it look in terms of structure, right? I'm looking to see if I have a kind of a five-wave decline. That's another thing that I'm watching. The other thing is there some kind of an equality here between the wave C decline and the wave A decline? Remember, in flats, especially in, when you have more of a standard flat look, which this one seems to have, just because you've made a marginal new high in here and it qualifies as running flat, the move was not as strong to the upside to kind of have more of a skewed C wave. So this allows for this proportionality in here where you go wave A, B, and then almost 100% C versus A. Now, if you switch from a log scale to an arithmetic scale, you'll see that this 100% was hit almost to perfection right in here, which is fine to do. You can use the arithmetic scale here because, the moves here were kind of sideways. So you're not going to get a lot of, huge moves into the price scale when you change between log and arithmetic. So now that we've taken this high in here, what's kind of happening next? And is there a way, let's see if there is a way that this move could still be bearish and there's something that I'm missing. And how can the market kind of trick me over here into saying, well, you thought you're over, but you're not just yet. So the way I would look at that is like, okay, this rise out of here, it is in so far just appears in 3 waves. So one thing for me that would convince me that we could be done is I wanted to see, let's say, maybe a small triangle in here, something like that. That would be a wave 1 and 2, 3, 4, and 5. So if this happens, and I'm getting another push up higher in here, now you know, my confidence will get bigger, right? That this low here, it's actually the proper low that we have found. So that's one signal that I'm looking for. Now, if that doesn't happen, and this sell-off in here starts to push back a little bit more, and you're starting to kind of get, you know, closely to these levels in here, right? Sorry about that. You know, just wanted to make this line straight. And you're starting to go back in there and you start to break below that level. That's a big sign that this move out of here, it's problematic. And you might not have an impulsive type price action in here, and you're more into another kind of corrective rise. So then what I think about is, well, what if this move out of here, it's still a 4th wave, right? What if this wave C, it's not done? What's happening then? So I'm taking this and I'm moving it lower, something like that. And then I go and I say, well, maybe this 5th wave still has to complete. This could still be maybe a 4th wave in here. Maybe this moves there. And is this something that can make sense, right? And then I'm starting to look at this decline, you know, from this highs and say, well, you know, how can I count this? You know, that would still allow me to be bearish and you know, support that evidence that, hey, we can still move lower here. So what if this wave 1, it's not complete there, but rather right there, right? So you go in a 1 and maybe that's a 2nd wave, and then you go 3, 4, and 5. And then the software just kind of says, well, listen, that's a problem. Why it's a problem? Because wave 4 terminates within the range of a wave 1. Right? So now you're having overlapping waves. That's a little bit of an issue. Well, you can think, well, that's fine, because in an ending diagonal, you can have that happen. But see, this move here is quite impulsive. So when you have ending diagonals, you know, you got to have kind of a zigzag in here, right? Then you got to have a zigzag in here as well, which you don't have. So that's another problem. So that means that because that this 4th wave in here pushed above this low, that's not a good count. So I gotta take the wave 1 and push it back there, right? And just say, fine, this was a 1, 2, 3, 4, 5 for the wave 1, that's 2. And let's see if this makes sense. Then you get another 1 and another 2. And now you're getting into some issues in here, because you're gonna have a 3, so you're gonna have a 1, 2, 3, then you have an overlap here with the 4 and a 5. So that's problematic as well. So you see what I'm going with this? It's very tricky to count it like this. Plus this 4th wave is quite large now, right? Compared with this wave 2, right? It's very kind of disproportionate. It starts to look like an awkward count, almost like something that you're trying to force to the downside, right? So it's hard for me to accept this narrative. And this is kind of what I do when I go and I study the internal wave structure of different legs that I'm looking at. I'm looking to see if the way I'm counting it makes sense. And I'm trying to exhaust all the probabilities that are within a wave count to come up with the best interpretation that I can have and build a narrative around that. Right? I'm trying to keep my mind clear of, let's say, any bias that I would have into the market, and try to listen to the price action. So I am listening to the fact that this could be a 3-wave move, but then at the same time, I'm trying to see how I can fit it into the larger structure. And since I don't like this, the way this kind of looks in here, then I got to come up with something different. Well, that something different is, if you still want to be bearish, is that this was instead a wave 1 all the way down to these lows. And that's your wave 2, which means that, you know, you're getting into a much larger decline in here. And you're starting to say, well, you know, if that's a 2nd wave pullback, and, you know, I'm looking at it, let's say in times of fibs, you've pulled back into the, you know, 38% so far, close to 50%. If that's a wave 1 and this is a wave 2, you know, that means that, you know, you're probably going to have a much sharper decline here in a wave 3, 4, and 5 and come all the way down here. Now, what that does, though, if you can notice in here, it changes the whole structure of the move. Now, it's going to be very difficult to sustain you know, the idea that this is actually a flat move, because this is going to become so large, it's probably going to push into the 161.8 multiple of this wave A, which is a, you know, kind of a large stretch for a flat move. So, especially when this wave B, it's not that high. You could have moves like this, but this wave B needs to be much higher so you can allow for a C wave decline into the 161.8 fib zone. So this kind of distorts the whole, let's say, flat or expanded flat narrative in here with this move. So that's why it's not something that I am willing to entertain under the flat scenario. I could entertain it, but it would have to be under different scenarios. And that scenario would be that this wave 1 out of here would have to move back to the stop. So I would have to count this impulse here a different way. I would have to take this wave 1, push it back in here, right? And it would be right there. And then this would be, let's say, wave A of a decline, followed by a B, and then maybe a C wave, or under a much larger circumstance, this would become a 5-wave decline in a wave A. You would get a B and then a much larger sell-off in the C wave, which can, you know, totally bring this Bitcoin market towards, let's say, $10,000 if you're looking at this from this point of view. So I'm traveling with it. I'm thinking about it. I am analyzing, you know, what's my, you know, what are my scenarios here, and you know, how I could be wrong about this market and where am I wrong about it, right? So for now, I'm going to continue to stay with this narrative that this was my best interpretation, and I will go until the evidence comes over to the contrary, that I am wrong, and then this market has a different plan for us. So for right now, I will stay with this, and I'm going to continue to look for signs that this is an impulsive move of the lows. If we're starting to fall apart here, like I've said, that things might change. And what this does, it's basically sending me back to my red count. And this is, you know, something that's also very appropriate where we're looking at this rise out of here, maybe as a 5th wave cycle, right? We're not, you know, let's say super bullish to the price. Just kind of on a shorter term, we wanted to see a completed triangle, maybe a push towards 100,000 into a 5th wave. And let me show you kind of how this looks at a larger degree. It kind of looks like that. So you go one wave 3 cycle, wave 4 cycle, then 1, 2, 3, 4, and 5 in here, right? So now kind of diving down into this triangle, this kind of starts to look like that. And look at the beauty of the wave structures in here. Look at the nice equalities that we have, right? So with a little bit of a difference here in this kind of WXY that's a little bit awkward on this kind of major sell-off that we've had here, the rest of the price section, it's quite beautiful. And you can see how, you know, this B wave in here, it's got, you know, a nice impulse, a very cool looking zigzag in here in this B wave, right? And then you get another 1, 2, 3, 4, and 5 for a wave C, right? This looks, and I mean, check this out. You look at this equality between wave C and wave A, which almost comes to perfection here at 100%, right? And then you're looking at the move to the downside here, where look at this B wave, right? This wave in here, it's a little bit smaller than this. It's not as much of a clean look, right? And that's why my preference is to count this impulsive to the downside rather than corrective, you know. But I am, you know, this is a very, very close second to me that this is, it's a viable interpretation, only because you have this kind of beautiful equality between wave C and this wave A. Right? You don't have such a strong B wave, but you know, the equality is there. You can look 100% right there, and you say, fine, this was a 1, 2, 3, 4, and a sharp 5 for a wave A. Then you go up in B, and then you have another 1, 2, 3, 4, 5 for a wave C of this larger C wave. So what this does now, next, it's telling us that you should be moving higher in this D wave. And this D wave, you know, it's either a zigzag or a double zigzag, a combination, where you're looking for this to have a little bit of an impulse here, again, in a 1, 2, 3, 4, and 5 for A, and then you can pull down in B and then up in C again. Or what you can have, instead of having this this ABC, you can actually have, and I'm going to go here and get it, a combination. I got a triangle instead, but you can get a combination here where you go, this was a W, you can get an X, and then you can get a Y wave, right? So this is another way that I could still, you know, remain bullish towards, let's say, 55,000. That's the zone that I would be looking for, right? And I can calculate some fibs here. It's one of the things that we do on a D wave. So I would go here and do D wave, and I'm going to go Alt D in here. And you can see that D versus B, which is the calculations that you do when you do a triangle, comes at about 55,976. So, you know, at the minimum, this D wave, that's kind of where it should travel, either under an ABC scenario, or under a WXY. So if you look at this as an ABC, you can still have an X wave formation. Now, this X wave in here can take several shapes. It could be a flat, it could be a triangle, it could be a zigzag, it could be a double zigzag. There's, you know, this X wave in here could take multiple forms. It can be very choppy. Usually this X wave comes near this B wave right there, right? So it's all a matter how we unfold from these levels, and if we're, you know, coming impulsively or corrective, that's going to dictate to me, you know, what's the next move that's going to happen to the price here. So either an ABC if we're going to get a 5 wave, either a WXY in here. Now, if you're coming below these levels, right, that's, to me, that's a little bit of a problem right there. 36 to 70. If this move starts to push lower than that, that's a very strong confirmation that you've had a 3-wave advance out of there, and it's possibly you're going to break lower to the downside. Okay, so that's my key zone that I am watching to see what's going to happen if we approach those levels, right? 36 to 70. So keep that number in mind. But this is the idea behind the triangle, right? So now what we've done in the room, actually, because both these counts were complementary, right? They were both pointing on a shorter term duration towards the same kind of an outcome, towards the same outlook, which is bullish. We initiated some long positions. And if I take you back in here to the Elliott Wave Cafe Pro Live Trades, this is a place where I you know, put all my trades that I take in Bitcoin, sometimes in Ethereum, but it's mostly Bitcoin trades that I take on a shorter term basis. Just tactical trades based on where you are in the sequence. This is besides, you know, any longer term holdings that we have. These are shorter term tactical trades that can take anywhere from, let's say, few days, maybe to a few weeks, depending on how strong the price action is. And this one, we initiated it on February 2nd, where I put up an alert that I said we're opening a long position at the market. We entered at about 36,920. We placed our stops below 33K. Then with the more confidence that we've had into the price action, we've added another position here on February 3rd. We've increased that with another 0.25%, with another, let's say, quarter there from a full position. And we've entered at about 36,950. So that build, you know, half of a full position. So not a full position there, but still, you know, a decent size. And then, you know, we started, as the market started to move in our favor, you know, we started to move the stops. So we moved them. Originally, we've had them at 33K. Then we've moved them up to 36 to reduce the risk, right? Then, as the price were making new highs, we started to exit at 42,300. This was about a 15% price gain from our entry to our first exit. Then, as I was monitoring the price action the following day, we raised the stops again to 38,300. We're starting to lock in price gains in there. Then on February 8th, again, we raised the stops to 39,500. We locked in 2,600 in price gains, and then we moved over And then a little bit later in the day, I think it was in the evening, this was in the morning, this was at 10 o'clock in the evening, we raised the stops again to 41K, we locked in, and then as I was starting to get the CPI data and, you know, notice that resistance, it's holding way too well for me to continue to assume that we're going to explode higher. I wanted to get out of the position and reestablish on a better, let's say on a better signal. So we finally got out. You don't see it in here, but we got out about 43,850 and for about a 19% price gain in there. So now we're flat in the price of Bitcoin, and we're going to go ahead and take a look at the next adventure in here. So what I'm going to look for, basically, it's if we're going to get a 5-wave move, then I'm going to look to enter back on a 3-wave decline. And then we'll see if we can enjoy a larger 3rd wave advance. And this is something that we do in the program every single day in terms of, you know, discussions and price levels and kind of where we are and you know, what I'm looking for. And I continue to monitor the price action to make sure that we stay on the right side of the, on the markets, and, you know, to just kind of take trades when appropriate. So this is kind of what we've done. And you know, kind of to go back to my point is that this was, both of these counts, right, the red one and this white count were pointing higher, at least on a shorter term basis, to, you know, to push us here either as a wave 1, let's say, of these lows, right? Because the first move that we're going to look out of here, if this wave C is done, then I got to have a wave 1, right? And then I got to have a wave 2, and then I got to have a wave 3, I got to have a wave 4, and I got to have a wave 5, just to kind of start to get out of here, take over these highs, and have a nice motive wave that tells me that the market is ready to push, you know, much higher into the next, let's say, 3rd wave primary in there. Under the red count, you're basically just, you know, looking for a move all the way up to here. And then you have to, you know, think about, hey, what if this was just a D wave, right? And if, you know, we're going to get some proportions in here, and that will kind of tell us, is this a wave 2 in here, or is it a wave B? And we'll get to make those decisions once this market kind of comes up into these levels, and then you'll get your E wave and so on and so forth. And I'm also watching some of these Fib levels, which are, I think, very important in terms of kind of time travel compared with the larger second wave that we've had back in here. I just want to kind of keep that proportion in mind when I'm looking at the count. So you can see, you know, Elliott wave, you know, it is somewhat complicated, but it's not, you know, it's not unlearnable, if that's a term I could use, right? There is, you know, I know there is a lot of probabilities that you can do, but, you know, once you kind of clean up the mess and you only start to accept certain things that look, you know, proportionate and in certain Fib zones, then, you know, then you can throw away a lot of the noise that you could have in there. And once you eliminate that, then your mind kind of becomes clearer about what you're expecting and kind of, you know, what you want to see into this market. So anyway, this is kind of what I'm watching in terms of analysis, and I've done a pretty deep dive. I don't usually do this, let's say, on a YouTube video, but I hope this kind of gets you to understand kind of where I'm coming from. And then, you know, here is another thing that kind of continued to convince me that, you know, we're still very much in a big adoption in Bitcoin. I'm looking at this line chart on a monthly time frame, and I can see it moving from the lower left to the upper right. We're trying to follow this massive trend line in here, and it's just another blip in here into the price where, you know, you're just continuing to kind of follow this uptrending market. So, you know, every time I kind of have doubts about it, I kind of pull back and I look at this picture and I say, well, you know, it looks like Bitcoin is going higher. It looks like, you know, I kind of have something to kind of fall back on. So it's something that I'm definitely watching. The other thing, it's obviously, you know, the candlesticks. That's a big thing that I watch on a weekly, monthly basis, over, you know, on a daily basis as well, depending on kind of where we are on the trends. So here is the monthly. It's, you know, a little bit early. We were looking at this closing at the end of the month when we've done the last video. So this kind of pushed back and had a pretty decent close. It's followed now by let's say a white candle in here. I would like this to become stronger and more impulsive, more bullish, to kind of engulf this previous one. We'll see what happens. Again, seasonally, Bitcoin, it's in a you know, good month. It's one of the best months of the year in terms of where we are seasonality. So we'll see what happens in here if we're able to kind of overtake this, and then, you know, you can jump from there to the weeklies, right? It's going to be important kind of how we close towards the end of this week. And if we're going to continue to kind of have this kind of rejection, out of here, that's a little bit concerning. So I'm going to see, kind of how we close out of here. But the fact that we'd overtaken the height of this candle, to me, that's a bullish signal, right? Because this was a super bearish one, and we were able to kind of get back above those levels, which, tells me that the bulls here, have something maybe bigger in mind. So I'm going to continue to kind of watch for that. And then the other one that I'm, constantly monitoring is where we are in terms of the moving averages, just to kind of know where the resistance and the support levels are. And I'm starting with the weeklies. I'm looking at the 200-week moving average, which right now it climbed higher than a couple of weeks ago. A couple of weeks ago was sitting at about 19,250 or something like that. And here we are now sitting at about 19,592. So, every week, as the price continues to either move sideways, right, or push higher, this 200-day moving average, this very important level, continues to climb. And right now we're reaching the levels that we've had back towards the end of 2017 here, where we've had that big top. That's kind of where the 200-week moving average is at the moment, right? Very interesting. Now, we've broken below the 50 and below the 21-week. So this was a bearish signal in here, and kind of look what happened, when we kind of broke below these levels. You broke back in here, and you went back and retested it, just like kind of what we're doing now, and then you moved sideways for a while, and then you had a drop. So, based on this, you can have all the expectations that, it's likely that could happen, right? But what's important, especially for the bullish narrative, is that we're climbing above those levels, right? If we're not able to, there's really, no point in arguing. I mean, the market is going to tell you, listen, there's not enough strength in here, right? These counts that we're thinking are going to happen, they're probably going to fall apart, and you just have to maybe accept a larger decline. So it's important that we climb back above those levels, regain that momentum. And it looks like the market wants to, but we're stopping, kind of dead in the tracks right there. So now you're noticing that on Friday we started to get, some news regarding, Ukraine and Russia, and there is a little bit of a, let's say, geopolitical risk in here. If something bad is going to happen, God forbid. And, we're also kind of getting into the narrative of the rising interest rates, right? We have pretty bad CPI numbers. I'm going to touch on this just kind of briefly, right? It's 7.5 year-over-year rate of change in the CPI, which is a, big change. In about 40 years, we haven't had that. This kind of tells the Fed that, maybe they should step on the acceleration a little bit more. If Bitcoin is a risk asset, it's going to get hurt along with the rest of the markets. So I think Bitcoin is going to start to kind of, have some interesting responses now that it's, more in a kind of the macro environment overall with the rest of the larger risk assets in here. So I'm very, very curious how it's going to respond and what's going to happen, and how much these correlations between Bitcoin and equities are going to continue to be displayed there. So, we have the next Fed meeting I think it's at the beginning of, it's in the middle of March. We have one more CPI number that's going to come, in March 10. So that's going to be important. But again, all we can do is just kind of look at the price action, see what happens, and, let's see if we can overtake these levels. On a daily time frame here, we're still below the 200-day moving average, right? So that's a bearish narrative, but this one points higher, right? It still kind of has an upside slope, which is encouraging. We've been able to overtake the 21-day, which is a shorter term moving average. Then you have the 50 here, offers support on the way down. That's encouraging. Well, let's see if we can jump back from here and move and reattack this 350 day and the 200 day in here, and start to kind of get back those levels. These levels here are important because they're coming into some big resistance zones, right? So that's that right there, right? Then you have this back in here. You got some fib zones from this to this highs. So this area back in here, it's going to be pretty strong. So that's one of the reasons that I kind of wanted to get out of the trade also, right? And I've targeted this 45 as being an acceptable level for a bullish move. And then, if we're able to do a fifth wave in there into that resistance and then pull back a little bit, right? That's going to be kind of my next move and my next kind of hunt into Bitcoin to see if we can push it back to the upside, back above those levels. But remains to be seen. So anyway, this is kind of what I have, guys. Now, one more thing I wanted to touch on regarding kind of what's happening in terms of a fourth wave. One more thing really briefly before I jump to Ethereum. Just because I put this fourth wave as a triangle in here, right, it doesn't mean that it's going to happen, right? It could mean that this fourth wave right there, it could be done. So this larger count could still be valid in a 1, 2, 3, 4, and 5. Okay, so you don't have to go back all the way here in terms of a triangle move. You can still, because now these moves here start to have proportion. You've passed 100% equality with this wave 2. So if you wanted to stay a little bit even more conservative, right, you can look at the 1, 2, 3, 4, and then a quick move up here in a fifth wave, and then begin the correction. Okay, or you can kind of be drawn out like that in a larger fourth wave. So just to kind of give you this other possibility in terms of, because I'm probably going to get comments like, hey, is this fourth wave? What if it's over? Well, this is kind of how you can think about that way. All right. And, the other thing, it's, the larger, let me see here. This is kind of how that looks. And then I have my, my yellow, which is the, kind of the biggest bearish one that I've touched on at the beginning of the video there, where, you can have this beginning as a wave A here, right? And then you get a B, and then you get a larger C for a second wave if you're starting to kind of crash into the market below these levels, and you do so quite aggressive. So that's kind of what I'm watching. All right, this is the most bearish count, and, hopefully it doesn't pan out, but I have it. All right, guys, so let's jump over and take a look at Ethereum as well. And this one, it's a little bit more of a trickier beast. It's got, the wave counts are a little more confusing. It's just a little weird to me, but we have two counts. So I have the green one where I'm continuing to kind of look at this as again, just a 1, 2 large third wave in here, 1, 2, 3, 4, and 5 complete. Then you go A, B, C, D, and E. This move out of here, I'm trying to stay that it's possibly a C wave of a running flat again, just like I have in Bitcoin. I'll show you the count here in a second, but it's not as clean in terms of its completion. You could have a fourth wave in here followed by another fifth, and maybe that's going to be done. That's probably going to push the alts lower one more leg, remains to be seen. And then, still a push up in D, E. So as long as this low in here stays intact, you still have a little bit more room to kind of unfold the C wave decline. So if you can look kind of back in here, this is kind of how this looks. It's a little problematic in here with the way this moves, right? So you can go in a 1, 2, I don't know, 3, 4. I mean, there's still some highs here, some lows to be attacked by this impulsive move to eliminate the narrative. But I don't know. I have a feeling somehow that this looks a bit more corrective than impulsive for some reason, right? Which matches maybe a C wave in there. So that's kind of what I'm watching. I'm still, not 100% convinced. You've traveled about 100% again in terms of equality. And then here is our blue where, this C wave, again, kind of comes into the equality C versus A. And then, if you're done, you wanted to see this starts to push higher in an impulse, right? So maybe wave 1 is done. You're doing a second wave out of here, 3, 4, and 5, and you kind of have to start overtaking those highs. But, I have a slight issue with this. And maybe that's why the altcoins are a little bit weaker in here. You can see in terms of dominance, we're still kind of holding those important levels. The alts are starting to come a little bit, but they're not, they still kind of struggle there. So I talk about it in the program. We looked at some relative rotation graphs in where we are in those cycles, what I'm expecting from them. And we're monitoring, like, I don't know, 30 to 40 alts that I don't talk about them every single day, but every time I notice something interesting in terms of some of these alts, I kind of jump on and I talk about it because they're very, very correlated. So, sometimes there's no point in talking about all of them all the time. It's just the narrative that's happening behind the price. So here again, if you look in the Ethereum, we haven't really taken any of this kind of swing highs in here yet. So I'm watching for that to happen. But if this was the end of the move, right, you might be starting to get an inverted head and shoulder in here. And I'm looking for this decline and then see if we can climb back above those levels, because if we do that, you know, that's an encouraging sign that we can continue to push higher. Again, I'm just watching for, you know, a D wave as well, right? Because this could be, let's say, in wave A, you're getting a B in here and then push up in D. So that's something that, you know, definitely kind of watching. So not much to really talk about in Ethereum. It's still kind of in a sideways mess in here. I remain longer term bullish in here. And again, if you want to take this fourth wave and move it back in here, that's totally fine. And this is some of the upside targets that I have towards $10,000. And we'll see if this is going to pan out. I think, and you need a narrative. I mean, one of the things that could be happening is if you have let's say, a slowing economy, right? I mean, you're noticing the Michigan consumer confidence was very, very low, almost like people are expecting a recession. They're kind of very negative about the future. And if you have a, you know, let's say a lower GDP and high inflation and, you know, the economy can't get moving in here, then the Fed will be less incentivized here to raise rates. And if it doesn't, or if it raises very little, or if their projection into the future are going to be kind of negative, and they're going to talk about, you know, stimulating in any way, then sure enough, you know, you can explode higher in all those risk assets from the S&P 500 to NASDAQ to Bitcoin, and you can kind of get the next leg up higher. So I know there's a lot of, you know, talk about the tightening, about how people are concerned about the inflation, how the Fed has to choose basically between, you know, providing, let's say, good returns for the stock market, right? For, you know, the richest of the rich, whatever. And then, you know, from people that struggle with the high inflation prices in there and, you know, what they're going to go. But you can see there's some political pressure there where, you know, Biden is basically asking, you know, the Fed and Jay Powell to take care of inflation. That is going to hurt them on the midterms if this continues to be elevated. So the Fed will probably accelerate on that and try to bring it, you know, to more normal levels. But if that happens on its own, you know, then they'll be like, see, it was kind of transitory. And, you know, we don't have to be that aggressive in accelerating, you know, the rate increases. So it's a little bit of a macro mess in there, but, you know, remains to kind of be seen. And guys, listen, Elliott Wave Cafe is on Twitter. Since last time we've talked, we've gained about 60 followers. So we're at about 460. Now I'm at about 520. Let's continue to push. Thank you for new followers in there. Come and check us out here. You can get in touch with me, you know, show me your charts, comments, whatever you've got. But I'm trying to kind of, you know, stay on top of the, you know, the markets and charts and stocks as well. So go ahead and check out my you know, my Twitter channel in here at Elliott Cafe. And again, thanks for watching. Please subscribe to the channel, hit the thumbs up, share this video. I appreciate you all from being here. We're pushing towards 4,000 subscribers soon on the YouTube, and we continue to grow, and I'm really, really thankful for all of that. Again, you know, I appreciate you. Thanks for watching. I'll see you a bit later. Bye-bye.